Welcome to the Daily Finance Wrap, your daily dose of personal finance updates covering investments, insurance, loan, real estate, and everything else to do about your money. Of course, we bring in the experts to do all the analysis. We'll also be taking our viewers' questions and queries. So please keep commenting and send us your questions on this YouTube live stream. I'm your host, Stacey Pereira, and today we have something quite interesting lined up, especially for all those traders out there that are watching us. We are going to be discussing the likes of momentum investing and how investors really go ahead to identify these momentum stocks and opportunities, and also some of the common mistakes that can be avoiding while choosing to use this momentum strategy. We'll get into all of those details, but before that, let's look at some of the top news stories of the day. Well, if you look at Indian equity markets, we did see the indices snap their two-day losing streak and ending higher on Wednesday. We saw the Nifty 50 shut shop above that 24,250 levels, whereas the Sensex too rose by about 240 odd points. This was mainly led by media, metal, as well as energy stocks. We also saw the broader range of the markets. The mid and the small caps see some exuberance. The mid cap index was up by about 0.6%, whereas the Nifty small cap index gained close to 1% in today's trade alone. Among the sectors, we did see selling in the IT pack, pharma, as well as PSU banks that have been rallying in the past few sessions. Those ones buckle under some bit of profit taking today, but we did see buying on the flip side into auto, bank, as well as energy and FMCG names. So that was a quick snapshot of what transpired in today's market action. But among the key stocks in focus, of course, was the Adani group of stocks. That one managed to again rise today. Most of the stocks in that pack gaining close to 10 to 20% in today's trading session. Now we saw the surge pretty much following the statements that came from the Adani Energy, Green Energy group. They've gone on to deny all of those allegations of bribery as well as corruption that was leveled against them, especially against its founder Gautam Adani as well as other executives. This was put across by the US Foreign Corruption Practice Act, or FCPA. Now remember, the Adani Enterprise shares, those ones jumped close to 10% in trade, hitting that upper limit and closing or shutting shop at 2,365 rupees per share. We also saw Adani Ports and SEZ, that shares rise close to 8.5% in today's session. Adani Green Energy as well as Adani Energy Solutions, both of those two stocks also hit the upper circuit of 10%, closing in at 890 as well as 660 rupees respectively. Whereas if you look at Adani Power, those shares soared as much as 17.5% at 514 rupees. Now the company went on to tell exchanges in a filing that Gautam Adani, Sagar Adani as well as Vineet Jain were not facing any of the allegations related to bribery or even foreign corruption under the FCPA, but instead the charges involved alleged securities fraud conspiracy as well as wire fraud conspiracy, and that's what they've gone on to clarify in this filing. Another stock that was in focus was also that of Ola Electric. Now, we did see those shares also hit the upper circuit of 20%, touching that 88.10 rupees per share in today's session. This after the company has gone on to launch its GIG as well as S1Z range of scooters, and this will come in that affordable pricing range. It has also introduced the Power Pod, what it calls, which is an inverter that will power homes using its portable batteries. Remember, the GIG range marks the company's entry into the commercial vehicle segment, and also that was not the only reason why we saw the stock surge. We also had international brokerage like Citi giving it a buy rating and has set a target price of 90 rupees per share. Now, this pretty much implies an upside potential of 23% from the last close of what we saw Ola stock at 73 rupees. So that was another encouraging bit that came in for Ola, not just its launches, but also a buy rating from Citi. And speaking about the primary markets, well, we did see NTPC Green Energy. This, remember, was the third largest IPO of 2024. That had an impressive market debut today. The company shares were listed on the BSE at about 111 rupees. each about a 3.33% premium, you could say, or higher than the IPO price, which was at 108 rupees. Remember, NTPC Green Energy has also joined that 1 trillion rupee market cap club, you could say, of stocks just on its debut day itself. The shares surged by close to 10% through the trading day. And on the other side, we also had another IPO, which was closing for subscription, this one being Envido Infra Engineers. This one was subscribed by about 89.9 times on the closing day. The portion reserved for QIBO, qualified institutional buyers, was subscribed by 157 times, whereas non-institutional investor category also saw some good bidding at about 153 times. But the retail investor portion, we could say that one was subscribed just by about 24.48 times. So that's to do with the two IPOs that you're seeing in the market and the traction that it has received. But those were some of the news stories and updates. But let's move forward then and talk about momentum investing. Now, among the many trade strategies that traders use, momentum is one of those more popular ones. Now, traders definitely go on to measure this momentum in different ways. Everyone has their own strategy, but they will be looking at these different opportunity pockets, and that comes time and again. But you need to have your eye on the screen, one would say, when it comes to how you can pick and identify. Now, the core idea across the strategy remains the same, that is to identify this momentum and to ride that wave. Now, momentum strategies can be developed on a single stock basis, or you want to have a whole sector that you want to be tracking, or it could also be your individual portfolio and how you want to choose, and whether you have a separate part for just momentum stocks, so that momentum investing, and how much you would want to put or how much money you think you're willing to risk, because of course the risk here is definitely much higher. But how does one read into all of this? Where do you get the the checklist that one needs to go by to see where exactly is that momentum coming for, how far will it last, and what is the right time to be buying and selling into such a strategy? Well, let's get discussing this and let's analyze how momentum investing really works all together. Joining me to do that is Anish Teli from Qued Capital. Thank you so much, Anish, for giving us your time and speaking with us here. Well, I just gave a gist of what really momentum investing is, and for a trader who does this on a daily basis, he might have different ways of doing it. But to our viewers, if you could just simplify this in layman's term, if this concept is new to someone, what really is momentum investing? That how would you define it?
Yeah. So hi Stacy. So momentum investing is, essentially like in some sense surfing a wave. It's taking advantage of a certain movement of stocks. It's the classic Newton's first law of motion, that things that are continuing in a certain direction, because the law of inertia, they continue to move in that direction for a foreseeable future. So now in the stock market, we see these trends emerge regularly in assets as well as in stocks. So there are various ways to measure these trends in stocks, and momentum is one way to measure that trend and build a system around this style of investing. I would say, to ride medium to long term trends in the market, whether it be stock trends, sector trends, or even asset trends.
Right. So then, what makes it so different from your traditional buy hold kind of strategy? Or what really are you gauging through this momentum investing, and how is it different?
So in a traditional buy and hold strategy, you are sometimes like to joke that you're trying to get a ticket to a party where the tickets are priced fairly low, and but you're buying a diversified portfolio. You never know which party is going to pick off, and so you're trying to buy undervalued securities. You're trying to build a portfolio of undervalued securities, and you're doing your diligence, you're doing your traditional analysis of the balance sheet, profit and loss, and all of that, and you're trying to hold it through a 3 to 5 year period. The way I would see a momentum investor is that a momentum investor is willing to buy a ticket to a party that's already started, and he's willing to pay a slightly higher price, but he wants to be sure that the party is on. So that's so they are going to buy a stock that is going up, and why does a stock, or why does a particular sector continue to do well, if everybody sees and everybody tries to buy into that sector, is that there are certain behavioral tendencies or behavioral patterns that emerge because there are human beings who are participants in the market, and they tend to make some systematic errors over and over again, which is underreacting to good news and selling winners too early and buying and holding on to losers for too long. So, because of these behavioral tendencies, these trends tend to last. And what a momentum investor is essentially trying to do is try and catch 70 to 80% of that trend. They will never catch a top or a bottom. You will never hear a momentum investor saying, "I'm buying a 52-week low" or something of that sort. For them, they will try to buy 52 weeks high. They will try to buy stocks that have gone up over the last 6 to 12 months in the medium run. They will not be trying to bottom fish, which is traditionally what a traditional discretionary investor will be trying to do.
Right. So, like you mentioned, this is where a party is already on, and you're getting to see all of these indicators, and that's when going ahead and joining the lot. But some critics would say that momentum investing then is just another kind of market timing, and that is quite a risky bit to get that timing right. Is that the view you share too?
No, I would say that when you talk about market timing, you bring in an element of forecasting. So if you're trying to time the market, then you are saying that, look, I believe that this is a bottom, or I believe that this is a top. You will never hear a momentum investor say that I'm trying to time the market. A momentum investor actually goes along with the market, and they protect themselves in different ways. You need to have a proper strategy in place, that you build a diversified portfolio of at least 25 to 30 positions. You have your rules in place, you have your risk management strategies in place, and you are in a way reacting to what the market is doing and not trying to forecast or trying to preempt what the market is going to do. Whereas as a discretionary investor, fundamental investor, you are saying that, look, I know that the security is undervalued. The market does not know it as of now, and at some point in time, that perception is going to be corrected, and that's when I'm going to make money. So, I would say that's the key difference. It's definitely not market timing as a strategy.
Right. Could you also just walk us through then what are these key indicators that one needs to look at when they're identifying this momentum, either in a stock or an asset or even a sector? Is there like a checklist that a trader can look at when they're looking at just momentum? Because for fundamentals, there are so many others. You can look at the EPS, the balance sheet of the company. But when it comes to momentum, what are we checking? What are the indicators there?
So in some ways, it's quite simple. When you are looking at momentum, you're looking at the price performance of a particular sector or asset or stock over the medium term, which is the last 9 to 12 months. And academic studies in the US, as well as now many in India, have shown that this is a period that indicates that if you look at this period, that will tell you what's going to continue to happen over the next, I would say, 3 to 6 months. So typically, the signals last for the next 3 to 6 months. At a 3 to 5 year horizon, things tend to mean revert, whereas at a 6 to 9 month or a 12-month period, things tend to continue in the same direction. So one is you're looking at price performance over that period. Second, once you say you've got a screen of 50 stocks, and all those stocks you can say that have gone up over the last 1 year or 9 months or 6 months, whatever is your look back period, as we would call it. Now, how do you rank based these stocks? Which are the ones you should be buying? So then, what you will look at, what relative strength, or which stock has gone up how much compared to others in the market. And you will also look at trading volumes, because a stock moving in an upward direction with higher volumes indicates that there is market participation. And another thing you would look at is the volatility. You would want a stock that is moving up fairly smoothly and not is not very volatile. So you would rank it based on these 3 or 4 parameters, and you can create your own ranking system, and you can probably backtest it if you're a programmer. You can backtest it in Python, and I'm sure there are a lot of other backtesting tools available. So you should definitely do that before you go out and venture and try and do this yourself.
Interesting. So there are those indicators that one can look at. You're saying you can look at the RSI, you can look at the trading volumes, you can look at the price activity, and that should be in your checklist at least for now. Okay, let's also look at the other side and some of the bigger mistakes that investors tend to make while trying to implement this momentum strategy. If you could just see something that has happened, an anecdote that you could share perhaps, or mistakes that traders tend to do when they're following this momentum strategy.
So, Stacey, I think what happens is that momentum investing is sometimes confused with chasing performance. And I think one of the mistakes momentum investors or investors who have not done their homework tend to do is they get in too late. And if you get in too late and the party is already over, you are going to be left holding with the bill is going to be, you are going to pay the bill for that. So you have to be careful. You have to have your strategy. You have to be disciplined in your approach, and this is as difficult a strategy as any kind of any other traditional strategy of investing. If you don't have discipline, if you try to chase stocks too much, if you ignore your risk management positions, if you uh, concentrate too much into maybe buying just 3 or 4 stocks, then you're over concentrated. And if you are buying say 75, 80 stocks, you're over diversified, because not one position will not make a difference to your returns. So investors tend to do something of that sort when entering, when the party is just sort of getting over, and that's typically when you see a top getting formed and distribution happening. So you have to uh, so that's why some things like volume comes into play. That if you see a stock which is trying to go up, but the volumes that are staying steady or sort of going down, then you know that you're in some sort of distribution, and you may be left holding the bag at the end.
Right. So then, how does momentum investing then perform when we are looking at different market cycles? We are always, of course, you're going to be buying the uptrend, like you mentioned, but when there's a major market correction, like what we saw at least, 2, 3 months just now here, in our benchmark indices as well, how would then momentum investing really perform during these downturns?
So, the good thing about momentum is that you don't have to be invested at all points in time. If you see that there is a storm approaching, or if you see that is strength that is weakening, or it is something is stagnating in the market, you can have filters that will say that I have a cutoff that the stock or the asset should be performing X% over the last 6 months or 1 year, and or you can have another relative asset that you're looking at. For example, if you're comparing equity and gold, now over the last 6 months, if gold has performed better than equities, then you can also switch from one asset class to the other. Or if equity is underperforming treasury bills or government securities over the last 6 months or 1 year, you can also slowly start switching from equities into cash. So those are the ways you can sort of protect yourself, because if you're assuming you're a long only investor, you're not going to short, and the market has become volatile or has gone into a downtrend, those are the times when a long only momentum strategy is not going to work for you. You will get a lot of false breakouts, in the sense that stocks will tend to move up and down, and they will not really form a trend, because that's when something like a sector rotation or a style rotation is going on in the market, and that's where you have to protect your profits that you have made in the last cycle. So one of the ways is to do either move to another asset class, or you can move to cash using certain of your methodologies.
Right. So then you would say that it's really important to do this whole rebalancing activity, and quite often, so that you don't get those downturns, or at least you not lose out too much on it. So, what kind of tools or resources would you recommend for an investor who's interested in learning about these kind of momentum strategies, and more importantly, also for someone who's just starting out? How should they be practicing momentum investing? What kind of, should they be going into stocks directly, or ETFs would be a rather safer bet? What would you suggest, both in terms of the resources that they should be looking at, as well as what should they be tracking? What kind of assets?
So it really depends from investor to investor. If you're going to give a lot of time to this activity, if you really enjoy doing this, then you would probably start go into stock. But I would recommend that you start off with at least observing or taking a small satellite position in something like a momentum equity fund. We have lots of indices, smart beta indices, which have been launched by the NSE, the Nifty indices, and a lot of AMCs have launched smart beta funds on these indices. So you can, to get the experience of how is the portfolio being constructed, how is the portfolio being rebalanced over periods, how is it performing across market cycles. I would say that's a good way to start off with. I don't you should have your low cost passive index funds as your core, but
Hmm.
it doesn't you can start off with a 10-15% perhaps allocation to some of these strategies to diversify styles, as well as to get a understanding of how this is going to perform across cycles.
Right. So look at your index funds, and also don't keep that too big. Just a 10 to 15% of your portfolio is what you're saying that you could look towards just a momentum investing. All right.
Right.
Then also try and give us specific sectors or type of stocks that beginners should look at when you're starting out. We did speak about the assets that they could look at, but if they're looking at stocks specifically, or sectors that actually have these kind of trends, and if you could give some examples in the recent past that can help our viewers understand what really we're talking about when we're saying momentum.
Yeah, so that's a interesting question. What you can do is that momentum is such a pervasive phenomenon across markets. It's not just in equities, but bonds, currencies, commodities, everywhere. In fact, in India, we have that saying in the market, "Bhav Bhagwan che," that price is God and price is everything. So price as an indicator can be very powerful in identifying trends in the market. So what one can do is look at sectors which are outperforming. For example, in the last year and a half, we've had the PSU sector, the PSU theme outperforming, especially PSU banks, defensives, defense companies. And so if you had identified that sector, and then within that sector drill down into stocks that are outperforming, that would have been a good way to identify some of the multi-baggers that have come into the market over the last 12 to 15 months. Say the PSU banks, you could have identified based on their relative performance versus other sectors. So that would have been a case of relative strength, and from those sectors you could have identified some of these outperforming stocks. The same way you could have avoided underperforming sectors that have not done well in the past 12 months, and you could have avoided stocks that were showing signs of strength but perhaps fading out in 6 to 9 months. So you could use it in both ways, as weeding out underperforming sectors and stocks, as well as identifying outperforming sectors and stocks as the market cycle changes.
Right. Wouldn't you then kind of mistake this for, just a knee-jerk reaction to news? And is that really the momentum, or is there more to it? Because for somebody who's new and who doesn't know this, there could be, what, that question of what is genuine momentum, or that temporary hype, or some news-driven activity, and how are they supposed to be distinguishing between the two?
So if a stock is actually in momentum, or if a sector is actually in momentum, now a trend will only be known in hindsight. But if it is genuine momentum, you will see that that trend does not get over in a couple of months or couple of weeks. So even if you are, you identified something that has already gone up, so say 40-50%, it will continue to move up over a period. If it is a genuine trend, it will continue to move up for the next 9 to 12 months to 24 months. It will be something that you will hold on to. So the key thing that investors should do here is have a plan in place and not exit these kind of, if they've got onto a stock or a sector that is doing extremely well, one would not want to exit in a hurry. But if it is something like a fad, which, something that goes up 5% one day, is down 4-5% the next day, again goes up 20% the next day. So one thing you should look at is the volatility of the path in which this price has gone up over the last 3 to 6 months. And then, so look at risk adjusted momentum. If what research studies have shown that momentum which is more smooth and less volatile tends to be a better indicator of trends in the future. And trends usually last for 6 to 9 months, and stocks move up like really really fast, and in these short periods. So even then, if you're able to capture about 60 to 80% of that trend, I think you would have done a pretty good job in identifying and executing your plan.
Right. Normally, when we talk about momentum investing, we are always looking at the upward trend. But there's also one part of this investing where there is a whole lot of short covering that happens, and one can take even those short or exit positions. Tell us a little bit about that side, and not just buying when you're seeing, or buying the higher highs, one would say.
Yeah, so that is a really tough one, because when you have trends on the upside, they tend to be far smoother and far less volatile. Whereas on the downside, moves are very very volatile, very jerky, and you can have very fierce bear market rally. So I think that is something that is best left to hedge funds, or people who are experienced short sellers. And that's a very very difficult strategy to execute, purely because, like you say, the prices take the elevator on the way, the stairs on the way up, and the elevator or the lift on the way down. So when moves are that fast and furious, it's very hard to take advantage. If you want to make big money, you want to make big wealth, be on the long side. On the short side, it's going to be very very difficult. So I would say that try to be out and protect your long profits when you see that the market is either moving into a downtrend or into a more volatile phase. uh, in those times, it's better to just be on the sidelines and try and be disciplined and not enter the markets during those times.
Right. So, what kind of adjustments then should they make? Because now they already, you've noticed this downturn in the market. Are you just supposed to exit right away, or you could choose different assets? How is one supposed to be adjusting while using this momentum strategy?
So, like I said, we look at, say, price performance or risk-adjusted price performance over the last 6 to 12 months. And what we have observed is the number of the winners, which we had identified, say, in June or July, have started moving down in relative strength, that they have started underperforming compared to some of the other stocks in the market, or to the market itself, as well as, they have started breaking down in terms of price action, or in terms of absolute momentum or trend also has started breaking down. So using some of the most simplest ways is to use a long term moving average, like the most popular one is a 200-day moving average, but that's very noisy to use. You can use something like a weekly or a monthly momentum moving average. Or you can use something like dual momentum, which is a strategy where you compare returns of equity market to gold, And if the returns of gold over the last 6 to 12 months is higher than that of the equity market, you can rebalance your portfolio and sort of slowly start moving from equity to gold. Or if you're not sure about gold, you can also move it to short-term liquid funds, or short-term, or hold it in cash. And that would be a better way to sort of protect your gains, and try and not, and even maybe, bring down your position sizing in these kind of markets, even if you're getting long signals, or if you're getting long positions. uh, it would be better to wait this volatile phase out. But if you are one who's not able to wait out, who needs to do something, every day or every week, probably at least manage your positions more carefully, and honor your stop losses, honor your system. That will sort of ensure that you stay in the game for the long run, because you have to survive these periods.
Absolutely. In fact, Anish, let's get a couple of queries that are coming on the page. Vineet Patel wants to know, he says that he works full time and can't be watching the markets all day, or rather tracking it so intensely. So is momentum investing still possible for someone who, with this kind of a schedule, or should he stick to the passive strategy? So is there some way, or, other indicators that he can be tracking that doesn't need him to be very, glued to his screen to know what's happening?
No, actually, on the I also don't have more than one screen on my computer, on my desk at any point in time. So actually, you don't need to be glued to the screen at all. If you have a weekly rebalance, or you have a monthly rebalance, in fact, the Nifty 200 Momentum 30 rebalances every 6 months. So you actually need just a few hours every week, or every weekend, that if you have your strategy or program in place that you have back tested, you just need probably 20-30 minutes every weekend, and you can rebalance your portfolio. You can download the data, refresh it, run it, and you will get your system signals, and you can execute that maybe on a Monday or a Tuesday. It really doesn't matter. So whether it depends on your interest, but if you're a person who's traveling, you're not sure whether you'll be able to execute some things on a Monday or a Tuesday, it's best, I would say, to stick to a low cost smart beta fund.
Right. There's another query coming in saying that they have tried doing this before, buying stocks when they are at their peak. But how does one tell whether buying into the real momentum versus jumping onto a trend and buying, and that is about to reverse, in fact. So that's how Amul Chawda says that he's burnt lost money in the past because he's tried to do that, where he's almost reached the peak, or the stock price has reached its peak, and you're seeing the reversal of that trend. How are you supposed to be timing this?
Yeah, so Stacey, that's where you have to really do your study. You have to do your back test. You have to be there through a cycle, and that's exactly what we were discussing a while ago. That people enter either too late, or they are chasing some particular stocks. So there is some discretion in what they are buying. Whereas if you want to follow a momentum strategy, you need to absolutely codify your strategy. You need to program it. You need to have your rules all laid down, and backtest them, and then see what happens during bad periods as well as good periods. uh, and uh, and again, diversify your position. Don't go into, say, 20% into one stock or something of that sort, because these trends will never, momentum is not a form of market timing. It is a form of reacting to something that that a trend may emerge. That's what you are sort of counting on, and you make a number of small bets, and you just need a few of those bets to pay off for the strategy to work.
Right. So it's not putting all eggs in one basket. You have to
Right.
have that diversification, more importantly, and also, have that risk appetite as well for somebody who's looking at the, this kind of strategy. That is important to first weigh your risk versus, how much money you also want to put in to something like this, and then build this momentum portfolio perhaps, and also don't put in too much, like Anish was telling us, keep that variation, and also keep rebalancing as and when you do see these trends happen. I think that pretty much summarizes what momentum investing is all about. And let me thank Anish Teli once again there for helping our viewers also with their queries and giving us the lowdown on what exactly and how one should go about momentum investing or even trading. Remember, it is definitely price based, but you can also look at the fundamental other cues that are there, to have those options open for you. Look at the other indicators, what the stock or what the asset is really showing, and then go ahead and you can get into momentum investing. Well, thanks so much, Anish, once again for giving us your time and speaking with us.
Thanks for having me.
Right. With that, it's a wrap of this edition of the Daily Finance Wrap. Many thanks to all our viewers who have tuned in. Do stay tuned to Personal Finance TV for more such updates.